This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of February 21st, 2022. Of course, February 21st was a U.S. market holiday as we celebrated President's Day, so all U.S. markets were closed. So there was no TFMR podcast that day. But once we got rolling on Tuesday, gold was started moving higher again on war fears and a number of other items. And we talked about gold that day in our daily podcast, noting that the technical picture in COMEX gold was dramatically improving with this uptrend, how the moving averages were positively stacked and moving higher. This is all a sign of a growing, emerging bull market. Again, that was part of what we discussed on Tuesday, February 22nd. Let's look at the bigger picture. Because again, you remember in the macrocast, we talked about, the first 3 or 4 months of the year, kind of the continuation of last year. And then, you start moving higher in this, into the summertime. Then everybody figures that out because you're picking off levels that everybody can see. And then the thing builds on itself. Okay, well, we're starting to build on itself. And we're only here, approaching the end of February. Now, we're getting a little overbought. That's why I thought I'd give you the RSI. We're up here at 69. So, yeah, there could be a pullback to 1880 or so, okay, and kind of work some of that off before surging again. Clearly, you can see the resistance at 1920. That's where we stalled out back in May and early June. But 1920, again, is the old all-time high that was back in September 6th of 2011. So there's a lot of significance to 1920. So the fact that we got to 1918 last evening before being forced all the way back down to 1893 shouldn't surprise you. 1920 on a weekly close will be a very important level to watch in the days to come. The other thing I want to point out to you is a little circled area. I mean, you've heard me talk about this forever, about the bullish configuration, what a bull market looks like when you look at the moving averages, where they're all sloping upward. The 50-day is above the 100-day, and they're both above the 200-day, and they're all moving higher. Well, what's going on here? Well, last week, and notice the rally that's taken place since this happened about a week ago, the 50-day crossed up through the 200-day. That's a blue line moving up through the red line. And now look at the green line. It, too, is moving up. Give it a couple of days, and it's going to cross. So if we can begin to extend from here over the next, 3 or 4 weeks, get above 1920, get it moving toward 1960, all of a sudden these moving averages are all going to be bullishly crossed. And again, it's going to be another sign to anybody that's willing to see it that gold is in a renewed bull trend higher. War pressures continued to build on Wednesday the 23rd. And precious metals prices continued higher as well. Even though Wednesday the 23rd was option expiration day, prices moved higher. Fears of war, that war premium coming in, drove prices higher. In fact, got silver above its 200-day moving average for the first time since July of last year. So we had to talk about that in our daily podcast, again, back on Wednesday the 23rd. Is the gold price suggesting that we're getting ready to pivot toward dovishness? Yeah, maybe. I think that's certainly noteworthy. Now look at silver. I mentioned silver being above its 200-day moving average. It's the first time it's closed above its 200-day since the middle of July. But again, you can see that moment in June, that FOMC meeting, that broke silver from 28 down to 26, tried to hold 26 in the 200-day for a month and then smash. This is now the first time we've been above the 200-day since. Silver also sensing this pivot, this change. Beautiful clear double bottom, 22 with support, 2 perfect spike lows off of 2150. You're going to look back at this chart like a year from now and go, oh my God, that was such a perfect double bottom. Well, here it is, right for it. Now, we need to hold above the 200-day. I can't imagine we won't just because of the way geopolitics are. But the next key level is once we hold. We'll be getting above that intraday high back in January, which is like 24.85 or something like that. Got to get above 25.50. Above 25.50, and people are going to really start getting excited about silver. So keep an eye on it. War finally broke out between Ukraine and Russia on Wednesday the 23rd, and the Thursday the 24th markets were absolutely crazy What went up in the morning went down in the afternoon as vice versa, as wars and rumors and fog of war and everything took over the global markets. I was out and traveling that day, so I did not have a podcast for all of our TFMR members. Instead, we had a pre-recorded podcast, an interview of a CEO and a chairman of a company called York Harbor Metals. The CEO is Andrew Lee. The chairman is Bruce Graham. We talked about their company and some of the unique opportunities they have. There's something we do on a regular basis at TF Metals Report. So for Thursday, here's a little snippet of what Bruce Graham had to say in discussing the prospects for his company, York Harbor Metals.
This project was actually mined more than 100 years ago, and what they were focused on at that time, although there aren't very good records, would have been copper. Zinc didn't have much value. It was heavy to move around. But based on the fact that this was right on the ocean, road access, people live there, it's got actually good support. The Newfoundland government is supportive. Newfoundland has become a mining exploration jurisdiction that people are flocking to these days, more for gold, I would say, than for base metals or silver, but it's still, it's a really good jurisdiction. And so this project, interestingly enough, if you believe in a greening economy, and if you believe in the fundamentals for some of the metals, like copper would be the primary example, the demand that we're going to see for copper going forward is going to be phenomenal. It's going to take a lot more copper for individual wind turbines, for individual cars that have big batteries, that have a lot of wiring in them. The amount of copper in an electric vehicle is probably 4 times what it is for a standard gas car. So, those things are going to consume metals that we just don't have mines for at this point. So being able to find something that's in a good jurisdiction, that's got tonnage and grade, that's close to the ocean, that's got multiple metals. This has got copper, zinc, silver, and cobalt. Those projects are going to be in demand. And this is a project that's not, we don't have to build 200 miles of road. We don't have to build power lines. We don't have to do any of that kind of thing. So this is a project that could be ready for production quite quickly. And I think it's got good potential.
And on Friday, February 25th, hope for peace continued to permeate through the precious metals markets and all markets for that matter. And gold fell backward. So did silver, removing some of the war premium that had been pumped in over the last 2 weeks. Now, when all of this really started to heat up back on Friday the 11th, COMEX gold was around 1830, maybe 1840. So the price of gold is now still 1890, which would suggest there's still a little war premium. But it also suggests there's been other good news that has impacted gold, whether this war cuts the prospects for rate hikes, or it's just the continuing inflation that we're seeing and some of the other economics slow down. That's also going to cut the prospect for rate hikes. So the macroeconomic conditions for gold continue to improve. As we know, geopolitical spikes rarely hold, so we expected this to be a challenging week for gold. And in fact, gold was down, but only $12, and silver was only down a penny. So we'll head into next week wondering what the week will hold. Hopefully, more movement toward peace, and we can get back to talking about just the macroeconomic factors that are going to be driving the precious metals higher. On this chart of gold that you see in front of you, you can see where we should find some support in this generally trend of rising price over the last month or so. We'll see if that holds come Monday and Tuesday of next week. Again, it's probably going to be another crazy week. Thanks for listening to the TF Metals Report podcast highlights. We'll have another show for you next week.